Hi friends, how are you? Vladimir here, and this is the weekly review for the first week of November 2012. We are getting closer and closer and closer to the elections, and on Tuesday, elections in USA of course, and Tuesday is going to happen. Well, how the market is going to act before that and right after that, that's very interesting to pay attention to. There are many opportunities forming, but quickly let's cover the things we've been talking about on previous week. I've been talking about the dollar yen. If you remember, we were here looking at these three candles engulfing, right? We said there will be some correction around 90.95 or a bit higher, and on the 4-hour chart it has to hold the 20 MA. As you can see, it spiked through several pips more and pushed lower. We were looking to the final target here, but based on the divergences rules, as we know, right? That's the target. That's the one. Based on the divergences rules, we hold our trades as long as we do not get opposite divergence, right? Very simple, as always, very logical. Here, unfortunately, we got an opposite sign, a bullish divergence, as you can see, which gives us the way to go out. After that, the dollar yen pushed higher, and later I will discuss about that, as it might go and be very interesting very soon. I've been talking about the dollar Canadian, that it's going to make a stop. I was talking here about this harami. Right after that, it pushed bit higher and made a move. As we can see, we are going down. From here, I was expecting the 20 MA, right, to be reached, which was reached right here. It's not the 20 MA anymore, but that's the level we were looking to take. First conservative target, I remind you. Second target, of course, that's a channel or expanding channel, it doesn't matter, and so it means that there is still room to go. I will discuss later what to pay attention to. Euro pound, we say that we are going for a correction, and right here, remember this correction, and right after the correction we should go for a sell. We got a sell on the levels we were looking for, and on the 1-hour chart there was a perfect divergence confirming that. And now on a daily chart, that's the trend line I wanted to be broken. You see that? Now it's playing there. If you put the line not through the spikes but through the close price, it's already broken. Through the spikes, it's still hold. And more than that, on the 4-hour chart, there is a bullish divergence. So be careful here now. And for conservative, as I'm not convinced now that this trend line is broken. Pay attention for, where is that? Here. That's the trend. That's the support line we have. Perfect support line. It's around 0.7785 or so. Holding below that should open the doors for further down move. How down? 0.793540 is a beautiful place. And of course, the next level here, that's through the spikes and the support, around 0.7850. So we need to pay attention that there is a room to go down, but pay attention for the 4-hour chart. Okay, 4-hour chart. And if this bullish divergence will take the pair above the trend line, this trend line on the 4-hour chart, again, that removes the bearish expectation for the pair. In case this divergence line will be broken here on the RSI, will be broken down, there is a room to go lower to the levels mentioned before. So still bearish for the euro pound, but now need to pay attention for the divergence that is being created on the 4-hour chart, and probably there is a reason for that, as this level is not clear and there is a fight between the bulls and the bears. We can see that right now. So we only need to follow who is going to win, the bulls or the bears. The bulls, if the trend line of the 4-hour chart will be broken. The bears, if the support on the daily will be broken, and this divergence line on the 4-hour chart will be broken. That means the sellers win, the bears win, and there is a room to push even lower. We also discussed about the Aussie Canadian, and I say that from my point of view we are reaching the top and we are moving down. Right now it created a beautiful candle. Daily chart 20 MA still did not reach, well, and we can see that there is a room to go. Final target for this pair could be this trend line. Right now, after these 20 candles, we got the opposite move. It's very tight. It makes some duplication here. Well, hold it until you get a bullish hidden divergence. It could happen from here to here or a bit higher. There is a support also around 102.60 which we need to pay attention to. RSI could go 420 and create extreme divergence. All these signs, the signs we need to pay attention to. Hold the sales until you get the opposite signs. If we get a retrace higher, you can go for intraday charts like 1 hour, 15 minutes, and look for sell opportunities. Sell on short-term divergences to enjoy the continuation down move. And as we see, there is still a room to go. So what do we have for the upcoming week? First of all, remember, Tuesday is elections day. How the market is going to be there? Well, I would be careful. Because I'm completely not convinced about the market become bullish right after that or become crazy bearish right after that, as many people think. I have bullish expectation. I'll explain why, but first of all, let's see what and why and how the market does. So the first pair to pay attention to is the dollar yen. On the daily chart, there is a continuing divergence. I am not convinced that this is the top, but it does hold it. As for now, it does hold this resistance. If we get a bearish candle, MACD turns bearish slope again, RSI creates a bearish divergence, and stochastic crosses down. That's a bearish sign that we are going down all the way to the trend line. I do want to remind you. How do we manage the trade? As always, until the target reached or until you get the opposite signs. Once you get an opposite sign, do not fight the market, take the money and get out. In case this level is broken, then I think we might go and push to 81.50, maybe even closer to 82 to complete the divergence there. So pay attention for this level, the resistance. If it creates a pattern, we're going down from there. If it pushes higher, which I think it could, because if I look on the weekly chart, it looks like the dollar yen is trying to break the Bollinger Band. So there is a room, if that is a real sign, there is a room to push higher. Maybe even higher than 82, like 84. Who knows? So pay attention. If the daily closest resistance line here is broken, that's a good sign, as long as it holds above. Because it could break and day after that close below, that's a very bearish sign. Okay, so pay with big patience here, because we are trading the daily chart. During the day, everything could happen. Pay attention how the day ends. Very, very important. That's about the dollar yen. Same about the euro yen, which still could push higher to 105, 106 range, which I was looking at, or it could finally go and break below the trend line. And in case it does, that would become a wedge break. And after a wedge break, we will look for this target, right? As a first target. That's the down move we could expect. And of course, breaking below that, open the doors for further down move. And of course, it's relevant for the pound yen, right? As we can see, which also play around the top and still needs to go for the trend line, and will go. And in case it does not stop from here but pushes a bit higher, then pay attention to 130.50, 130.30, sorry. Pay attention to 131.50. That's the levels where the pound yen should make the stop and a down move right after that. And Aussie yen could be another pair as well. You can see inverted hammer holding the resistance. right? Continuing divergence. Are all the signs that we are going down to the 20 MA. In case it pushes bit higher, pay attention to 84.30 and 85.30. Actually, each 100 points from here could give us another sell before the cycle begins. Okay, that's all that. Now, some potential intraday opportunities. The pound dollar, as we can see, the pair is moving down very, very strong. It's making a band-to-band move, which one of my followers suggested. DDR, if you hear that, thank you very much, my friend. Beautiful band-to-band. It's pretty wide. So we expect after that some stop here around. In case it pushes bit lower, right, somewhere to this range, we might go and get here a bearish convergence. Definitely it will be not classical because it all looks like a sideways moves, but still from this area that could give us the correction. On the 1 hour chart there is already 20 candles, right? So if we get any push lower, that will create probably a divergence on the 1 hour chart and then a deeper correction up. How deep? Well, the 20 MA on the 4 hour charts could act as a first target in case it pushes lower, correct bit higher. That's the potential trade for us. Alright, buying the pound from these areas. I would suggest, of course, the last low as the last level. It could stop before the retrace. In case it breaks through directly, immediately, and does not even make any sign of a stop, just ignore that. Just ignore that. That's not the situation where we want to be. In case it makes the stops and on the 1 hour chart it does create a divergence for us, that's where we want to be. There is already more than 20 candles right, and we all remember what happened on the last times we got 20 candles right. Perfect. So that's about the pound dollar. The next things I want to discuss about will be the gold and the silver, which did the move. I was looking for them. I already started to buy. Started to buy around these levels. And I was looking for this sideways moves with a potential break. Finally it did. I jumped in because, as I said, gold is gold and you never know when it's going to push up. It's better to be in with a small lot size. Now the gold makes the down move and reaching the perfect levels. There's a trend line. That's the deepest one I could see coming, but there's also shorter one, this one, which is already coming and reaching. You see that? 200 moving average also coming. That's around 1660, 1670. That's the range. There is support range. All perfect, and it's going to create a continuing divergence on the daily chart. If it pushes even lower, then pay attention for the RSI. We are going for extreme low on the RSI. How powerful is that for the gold? And more than that, if we pay attention for that, we are out of a daily average true range channel. That's an average true range channel, and we are out of that. We're out of that, so it's going to make a stop somewhere around and push all the way back up. Maybe after the elections, the gold and the silver will, how I call the name, rebullish itself, right? Maybe the gold and silver are going to rebullish itself and turn up. Silver, same story. There is a trend line meeting us right here. That's the bottom, and we have one higher. That's here. 200 moving average, support range, continuing divergence which is going to be created on a daily chart. RSI which could go and come to extreme. Very bullish scenario is being built for the silver. And yes, they both, gold and silver, could push a bit lower, but something very nice is about to happen for them. So stay tuned. That's what I wanted to say. Few words about the indices. As you know, I am bearish, and I was looking for, that's a Dow Jones, by the way. I was looking for that, and I told you we might go for head and shoulders, remember? So can we say we have a head and shoulders? Well, we have a shoulder, we have a head. We might have this as a shoulder as well. I'm not convinced it is, because it could push from here before crashing. Anyway, follow the neckline. Placing itself below the neckline, below the 200 moving average, will give us all the bearish sign we want. And based on weekly chart, there is more to go. Based on monthly chart, there is more to go. And that's relevant for everything. The Dow, the S&P, which makes the same, and of course the Nasdaq, which just places itself again below the 200 moving average. So there is a room to push lower. But, and here's a big but, make sure you do it after the elections, because all happens before could be just fake signs. Only 2 days to wait since the open of the week. 2 days to wait, that's all. Have the patience. The opportunities will not run away from you. Alright? That's the biggest tip I could give you on such market conditions. So that's the main things I can find for the upcoming week. Seems it's going to be interesting. Many opportunities on the charts, and I still did not talk about the Aussie dollar and the Kiwi dollar, which I found also very bearish. I do prefer for them to wait a bit more, as the RSI on the 50 on the daily chart for both, and on the New Zealandian it even holds above. I prefer to act careful with the Pacifics directly against the US dollar and wait a bit more. Just a few words on the dollar Canadian, which I was talking. Final target is still here, but pay attention for this pair, as it might go and stop on the 20 MA, playing around that, maybe even try to create a new high. And on the 4-hour chart, okay, there is, that's the line here, approximately, okay, something like that. You need to pay attention to breaking above this line. And I would say break above again the parity again, place itself above the parity again, will be a warning sign, right, to get out. As long as it does not there, it might go and create a head and shoulders here and pushing lower. I hold my bearish expectations as long as this trend line on the 4-hour chart holds, or in other words, as long as the parity level. That would be all, friends, for the upcoming week. So happy elections. Good luck for all those of you who are going to vote, whoever it is. And I'll see you in the live trading room and in the chat, of course. Have a wonderful week with great opportunities. And thank you very much for your time watching this video. Yours, Vladimir.